everybody. It's Larry Berman here. It's my favorite time of the year where the North American continent starts to get warmer and warmer and warmer for months to come, and golf season comes to North America. So I'm really excited and pumped. Last week we talked about an oversold condition in the markets and ripe for a little bounce. And when I said a little bounce, we got a really little bounce. Anyways, let's dive into the chart room and have a look at if we learned anything this week and in the last few months. Okay, so we have 4 charts to look at this week. This is the SOFR rate. So since the US election, not a lot has happened overall. There's been a lot of noise. There's been a lot of geopolitical wrangling. But when we look at capital markets, we have 2 Fed rate hikes, and it appears after this week's meeting, I believe they're on hold. The marketplace is pricing 3 rate cuts. The dot plots are at 2, and I think at best we get 1. So a little bit of dislocation there, but Powell is who Powell is, and he seemed to give that bullish message. So we got a little bit of volatility off that to the upside. It was mostly corrected Thursday and into Friday. And again, noise is the main message here. When we look at broad commodity indexes, higher since the US election. And if we look at what's driving that, it's not crude oil. So broader commodity price inflation, not driven by energy. So that's a very, very interesting message. And trying to unpack what that means for investment portfolios. But it basically means costs are going up, but the bigger cost for people, energy, heating their homes, driving their cars, curtained. So it'll be kind of interesting in the next number of months on the inflation and rate cut side, how that dynamic plays out. We heard from several administrative cabinet members, Lutnick, Dissent, obviously Trump just about every day. And, messages, they don't seem to care at the moment about market noise and volatility. So that's interesting because, years ago, Trump only cared and mentioned all the time about the level of the stock market. He mentioned briefly that he felt Powell should be cutting rates this week. And then you didn't see much after that. So kind of an interesting shift there. And to me, that means the market is at risk for more volatility. When we look at the US long bond, TLT ETF, since the US election, lots of noise, both on the positive side, on the negative side, end to end. We seem there's virtually no change in the first few months since the election. If we look at just the last couple of weeks here again, markets making a lot of noise. So into the strength here, we've trimmed duration in our bond portfolio, but equally as happy if we get back to the bottom of this range to extend duration. And that's really, it's going to be a two-way game. Lots of noise, lots of trading opportunity for the traders. I wouldn't get married to anything but a range trade at this point with the risk tilted to the downside. Equity markets since the US election, now down. Over the past week, I think marginally up. We blow this up and we say we finished last week, the 14th, at 56.39. There's a buy order at the end of the day that just lifted us a little bit, but literally, half an hour before the end of trading, if you could see, you probably can't see the number here, 56.39 at 3:30, buy order in at the end of the day. So it's an up week, but really it was an uptick at the close with a lot of noise in between, showcasing a Fed meeting. when we look at in terms of retracements, so we can look at the top to the bottom here and say, where could it bounce to? You know, the normal place is somewhere between here, in terms of if you want to reset shorts. So far, what's the catalyst that's going to get us there, other than, you know, maybe another week of chop on the sideways, but I would argue we see slightly lower lows before we can get above 5,900 in context of the next few months. So caution remains the message on equities. Expect lots of noise, expect lots of volatility. You know, our portfolio that's more value oriented, value tilted is doing better this year. We'll know a lot of the weakness is coming from some of the more overvalued names in the portfolio. And when they don't have something good to say, like a Tesla, it gets really hammered. Although that's its own unique beast. Anyways, that's all we have this week. Have a good one. See you on the flip side.